Okay, guys, going to go to market on the DAX this morning. We're going to pick something from our little video vault where I keep all my strategies. Bear with me a second. So I'm going to come down here. This is our Discord. Kevin's coming into the bar. They're all meeting each other now in the Trader Talk, and they'll all start discussing what they're up to in here. And then down in the video vault, you've got Where the Scruff, which is my main way of trading. It's the full way of trading. This because your entry isn't the most important part. There's a lot more to it, as you can kind of see. All of that encompasses one way of trading. Now from here, we've got GoldenEye, which is the crux of that. Green light, red light, box theory, the river, push, down into various other strategies like no man's land, etc. They're all down here. But I think we're going to go, well, what should we do? Well, what have we been doing all week? Well, we've been doing green light, red light all week. And there's also the box theory. So what I'm going to do is I'm going to do a combination of the two. So that's one of the things with trading. Most people think it's a piece of piss and that you just simply click a button and away you go. It's not that simple. I might explain some of the hassle that I get, because most people are looking for magic pills and they don't sort of realize you actually got to put a bit of work into this. And then when they find that out, they kick off. And then when they kick off at me, I'm just one of these that'll just go, well, I'm not really bothered. Just stick all the videos in the video vault and away we go. So what are we looking at? Well, if you're looking at something like this, you need a range. So you take your range from the hour. Where are we at? Well, there's your range right there. There's a range. We can kind of see the last candle, which is here. So that can also create a range. Then you need level principles to work to. Well, it's here. We quite high into the level criteria. We flick that over. You'll see there's plenty of room to the next one. So that's a principle of +1, -1. What can we see? Everything is to the upper side. It's pulling back to the bottom of the range. Fine. Take it with 15 minutes so you can see what's going on. Now, the trigger candle was actually back here somewhere. Okay. Yeah, this one here is the trigger candle. Okay. So we want to be entering business in and around here. So this is the range it's going to break. Trigger candle there. It's at the top of it. So what I'm going to do is I'm going to drop it down into 5 minutes. I'm looking for 10 pips per trade. It's early morning. It's 8:20. What I'm going to do is I'm going to put the order above there and I'm going to follow it down. So let me just do that now. What we're going to do is 10 pips. Bang. Job's done. Right. So we've got a 10 pip target on that. Okay, cool. All I have to do now is I wait. Get that triggered. Let it smash into it. Job's done. Now I also stage. That's where the levels come into it. I look at swing points. That's another part of the principle, because if you're wrong, which you need to know, that range can now tell you where you're wrong. So you can work out your points of pain. So there's a swing point there and there's a nasty one there. So that'll be the one that I'll look at. Goes beyond that. Got some thinking to do. And I certainly don't want it to go beyond that point. Okay. Now you look at that and you'll go, well, the target's only there, but you might put your top down there. So what? I mean, what's it got to do with you? How I operate my account? I don't tell you how to operate yours. The difference is I could still go into that and make 1-to-1. That'll blow your mind out. I can have a stop down here, the target there, and I'll be at 1-to-1. I always enter the market at what's called 50-50, okay, 1-on-1. And it's all based on an investment that is predetermined and it's mapped out. Now you see that in my journals. It works out what my daily allowance is. But because I stage, I don't actually go to market at 100%. I build a trade up. And because I'm building up a trade, that means my exposure is always minimal. And if you understand the maths behind it, down in the squad, when I've gone through madness, suddenly the light bulb comes on. Because you go 100% to market at that point, you've got nowhere to go. Nowhere. You can only add to it. But if you build your position, well then fine. You make more money, but you also look at every position as an individual asset. So that's an investment. So here there's £5 in the market as a position. Well, the investment into the market is relatively minimal, and I'll get a return against that investment. Now, if I want to go into the market more, it's like getting a discount. Same as what I did when I was doing my business days. So not to worry. So let's see if we can get some money out. And actually, before I scoot, well, no, we'll play this out and then I'll tell you, because I was asked about losing trades. And I'll tell you something about that. Because one of the things with most traders is, oh, yeah, I've got to manage my losers, got to manage my losers. You're losing because you don't know what you're doing. So you're constantly losing. And therefore you cry about it and you think it's normal. It's not normal. You should not go into the market expecting that you can't do it. That's like having an engineer working on a car that doesn't know what they're doing. Of course they're going to make an arse of it. But you get an engineer and a mechanic that's worked on those things for 10 years and they know it inside out. They don't make mistakes. You need to be that mechanic. But if you're losing all the time, it's because you're not good at this job. So you have to learn the job. Go back to school. Learn it. And if you don't like that, well, I'm not bothered. You know, after this week, it wouldn't bother me if I never made another video. Right, let's see if we can clear this out. Okay, guys, that's the job done. It's gone straight to target where we wanted. Because I'm working on sort of 10 pip scalps, give me a second, I must remember to do this. There you go, another 50 quid in the bag. Now, I've done what I need for the week, so I don't need to push it any harder. But it was well executed, it's well planned, and that's the key element, okay? So the job's done. Now, I said I'd touch on losing trades, and I did to a degree with the mechanic. Whenever you go to market, if you just switch the screen on and go, well, I'm here, you're here, give me a trade, which is what a lot of people do, you're always going to be on the back foot. And not only are you on the back foot, you're going in without a plan. And the amount of emails that I get just show me the trigger. Just show me how to get in. Well, I showed you all this week. And nobody could really get it to work the way I did. And when I started digging into it, I figured it out. Case in point, let me just kind of pull something in for you. There we go. So, if you look at this particular poll, it might give you an idea of what I'm driving at. Now, it's split up across 60 votes, so it's a reasonable sample of data, but it gives me a good idea. Now, up until a couple of votes ago, it was just manual and pending. But there's a couple of EA traders come in. Personally, I'm not a fan of EA because there's no management behind it. And I'm 20 years in the industry this year, and I've never really seen an EA that survived over the long period. So it's not a bad way to go because the world's getting modern now. But for me, I prefer to be able to manage it myself. So that brings you down to manual and pending. And if you look at it, the manual traders far outweigh the pending traders. But the losing traders far outweigh the winning traders. So, does that raise a question that the losers are just a little bit too trigger happy? Now, for me, I think it paints that picture, because I touched on earlier on about mechanics, and a mechanic can go to an engine, look at an engine, and he'll start fiddling with it, pull pipes out, pull bits and pieces out, and they pretty much know what they're doing, but they've got a management thought process in their head. They're going to change a turbo, they know how to get into it and various things, and they become specialists on a car. Now, I know this because I had a Range Rover. At the minute I've got a Mercedes, but they go to two separate garages because the Range Rover guy only worked on Range Rovers and he knew them inside out. And I had a Mercedes for Joanne at the time as well. He wouldn't touch Joanne's car. So this is through the years, and vice versa. So they stick to what they know because they planned it and they know exactly what they're after. Now, is that somebody that just goes, yeah, I'll have a go? Well, that's your backstreet garage. Difference between a specialist and one thing. Strange analogy, I know, for trading, but the principle is the same. You trade what you know and you follow the plan that you know. Now, for somebody that's just rocking up and switching laptop on and go, well, I'm here, you're here, give me a trade, click. Is that trading or gambling? Personally, I'll say it's gambling. And it comes down to FOMO, fear of missing out, boredom, because they're just in front of it and they think they have to press the button. So they're constantly searching for a trade and they're going down the time frames, looking on minute charts, thinking, oh, here's all the action. Whee! Oh, I've seen the big fella do this, I can do. Oh, no, I'm not doing this. This is going too well. How come the big fella does this and I don't? Well, it's because I know what I'm doing. And the third part is you don't. So there is an element. And the element was, as you're going down the chart looking for an entry, I'm going up the chart looking for an entry. So I'm going the opposite direction. You find your value on the hourly, yet most losing traders think it's further down the chart. And it always comes down to just pressing that. I can give you a strategy. I gave you one all this week. It's now in the video vault, because I just wanted to see what would happen. And sure enough, nobody listened to that the videos, because in them I was telling you about the homework and what goes behind. They weren't interested. They were only interested in the trigger. The trigger is the last part of the puzzle. And in fact, the trigger is probably the bit that holds no weight whatsoever, because that's just your time to go in. The weight of your trade is what you've done before it and what you're going to do during it to close it off. Now, what you've just seen, it was across 3 time frames. I looked at an hour to get a sentiment signal. I looked at a 15-minute to clarify the range. And then I just looked at a 5-minute to see if the timing was correct. So that was 3 time frames to look. Inside it, there was a trigger candle on each one of those time frames. So I could see the main sentiment candle. I could see the key trigger candle on the monitoring chart, 15-minute. And then I could see the fine-tune entry on a 5. So that was 3 lots that I had to look at. Prior to that, I already had to analyze the market, put levels in, figure out where the key Fibonacci's are, which are areas of attraction, understand the sentiment of what that market is trying to achieve, and then also understand a safe target when I was trading. Now, on top of that, once I've gone in, I've not only got the safe target, I've got the sentiment, I've got the triggers. I need to know what I'm going to do when I'm wrong. So I can't just go in with a arbitrary 10 pips stop because the target's 10 pips. The DAX will take that in a heartbeat. Right? So you've got to be a bit careful. So you've now got to work out where the stop has to be. And the stop is not arbitrary. It's not, oh, I go in with just a 20 pip stop. That means nothing. Zero. The market doesn't care. The market will look for structure points and areas of attraction. So I have to see that on the chart to see where it's going to probe to if I'm wrong. Right, okay. If it goes beyond that price, am I prepared to pay it? Yes or no? Keep it binary. Well, it's no. So therefore, that's where the stop is. Put your box of pain on that screen. You saw a grey box. That's my box of pain. Right. Am I going to go market 100%? No, because that's stupid as well. You know, because very rarely you will time it to the pit. So you test the water and you build a position up. As you build a position up, you reduce your exposure. As you're reducing your exposure, you will naturally increase your upside. So you've planned it all out. Now, if it runs for you straight away, amazing. It just happens to be you called that one right, but you were still paid. And you didn't put any extra in the market. So therefore, you didn't put anything at risk. It's just a way of trading, guys. And then it's based on a monetary amount, not these stupid percentages. Because what that does, it sounds great on paper. You try putting it into practice, it doesn't work in the real world. It's like your RR. On paper, it is a fantastic way of trading. In the real world, it doesn't make you any money. Because if it did, we wouldn't be having this conversation. Something for you to think about. So that was that. It's Friday. I'm going to have the rest of the day off. I'm going to enjoy the weekend. We've got the conference this weekend. And next week, I'll be spending quite a lot of time with the guys in the squad. I'll be spending a lot of time in the squad anyway. And as you've just seen, the video vault's there. 4,000 videos in there. And keep you going for ages. And it's all about what we do. And all the live streams are in there as well. So as always, guys, trade well, keep your risk managed. But above all, do what you love. And the money will follow. See you all in the next one.